Well, good afternoon. This is Steve Carver talking to you from visiting with you from my home office in Dunn, North Carolina. We're going to be talking about a lot of stuff tonight, mainly bookkeeping and forecasting and negotiating are our primary topics. Plus, we'll be reviewing and wrapping up our series. This is part number 6 of a 7-part series, so everyone is certainly welcome, and you can attend these series one at a time or attend them all. So thanks for being with us. This is my presentation number 1129 on my journey through entrepreneurship that's lasted some 64 years now. And I appreciate the fact that you're letting me join you on your journey as we go along. So we're certainly glad to have you. Also, if I was writing down my email addresses for those of you that are not able to use chat, I just gave it as stvcarv@aol.com. And then you can also see my other email address, the Gmail address, very similar, it's carvstv@gmail.com. And you're certainly welcome to send me any information that you'd like and request for more, and I'll be glad to help you all that I possibly can. I am not a lawyer or a tax attorney. I'm not a bookkeeper, but am a fellow that's been in business for a long time, and I'm certainly glad to share information that I've learned through the years with you to help you avoid some unexpected expenses or possible risk, and to share with you good firm strategies that have helped me keep a business going on now for over 64 years. And so, again, thank you for being with me. But always, my first advice is before you make a major decision, it's really good to bounce it off someone else and see how it sounds when you say it, and let someone maybe give you a second or a third opinion if they are qualified and indeed you want to go there. And one of the very best places that entrepreneurs can get good advice free of charge, professional advice, is at your small business centers at your local community colleges. North Carolina is kind of unique in offering this for entrepreneurs, and we should be very proud of our state for doing that because it's so helpful. We're being sponsored tonight by the Small Business Center at James Brunt Community College in Kenansville, North Carolina, where Joey Wynn is the director, and she is working her heart out to help you. And if you would give her a call and set up an appointment, she'd be glad to hear about where you are now and where you want to go and get to know you better and offer these centers assistance for you. They are there to serve not necessarily the students at the community college, but the entrepreneurs out in the neighborhood, out in the community and in the county. So give serious consideration to giving Joy a call. Her phone number is 910-659-6008. And she would certainly be glad to set up an appointment at a time with you to give you all the help that she possibly can. So let me invite y'all to mute your microphones now so we won't get any background noise. And then if you want to turn it on and ask a question, you can do that yourself. Joy's assistant is Lynn Murphy, who's new on board and just starting to help folks too. So when you call into the office, you may get Lynn on the phone and she can help you and get an appointment set up or send you whatever information that you need. Tomorrow, or maybe even tonight, you'll get a survey about tonight's presentation. This is your good opportunity to tell Joy and these small business centers what you think of the program, what you think of my presentation, and what additions or deletions you think would be appropriate to help folks where you are in your journey. So give that some consideration. Those that had signed on early and pre-registered probably have already gotten an email from the Small Business Center, including the 9 handouts and study guides that we're using tonight. Number 1 is the one that's titled 1129. That is a outline of the talking points that I'll be going through. So as you're attending these webinars and you get your handouts in advance, if you can print out that talking points and as an outline to use to make notes on as we go along. It can be quite helpful. But there's a lot of other information in the emails that are coming to you with different topics that should be quite helpful. And included in that is a copy of the quiz that you will need to complete to get your certificate of completion. Is in one of the handouts, and also the quiz with also the answers on it. So I've simply asked you to make sure that you read that and then take the quiz without the answers, fill in the blanks, and send it back to me with your address, and that way I can get a certificate to you at the end of the course. Lots of good information there. I hope you enjoy it. Next week, again, we'll be talking about basic taxes, focusing on deductions and depreciation, record keeping, and then I'll add in some really good secrets about how to close sales and contracts that are quite helpful for folks that are just entering the business world. So we'll look forward to working with you. Next week is required for folks to earn any of their certificates. The reason it is required is this where we kind of wrap things up in a good review. So if you would like a certificate of graduation or completion, make sure you plan to attend next week. I'll be giving you a lot of information tonight, as always in the webinars. You're welcome just to sit back and take in what you want, or if you're digging in, taking notes, working really hard to get your business up and running, that's wonderful too. I call that the folks that are going the extra mile. But welcome, take what you like. You're not required to do anything, but just enjoy and let us work for you. That's why I'm here. Congratulations to several of you here. Looks like about 8 folks that have attended all the presentations so far. Bobette, Patricia, Fidel, Marianne, Sherry, Teresa, and Mike, thank you all for your perfect attendance. And Pam, Keisha, Ed, and Danasha only have missed one, so y'all really come the extra mile as well. So thank you all for that. And I keep up with the attendance, so indeed we can give a good report to the Small Business Center. And also that if you miss one of the presentations during this series, but you attend the next one that we'll be having, that I can give you credit for the ones that you did attend. Thank you all for information that you've sent back and forth. And I want to give a special thanks to Patricia, Marianne, and Gail. They're working really hard to get their business Finer Follies main event coming up this fall with a pop-up presentation over in Bunn, where they're inviting people to come in on a Saturday for a live presentation and talking, and hopefully making lots and lots of sales. They've got a lot of beautiful things to sell, and hope that you'll be able to come. And their pop-up is on Saturday, October 26th. So if you'll go to Finer Follies and on Facebook and I think Instagram, you'll see a lot of information about their program. And thanks so much for sharing, ladies, and look forward to y'all having a great pop-up event. Pamela's been with us all along. She's a previous first-in-class member with her farming and her vegetable selling. And this year, between the drought coming early and the heavy rains late, I'm not sure how much vegetable she has to sell this fall, but I'm sure she'll let us know when she's got some items ready to go. Keisha's been with us on a regular basis and doing a great job getting her business up and running for event planning and special events for you over in the High Point, Greensboro area. Sherwake is making T-shirts and all different types of crafting, personalized crafting for you. Invite you to enjoy Shereka's work. Visiting Crafting Chaos at Facebook. And Sarita is a virtual assistant and does a lot of different things for folks. And thank you for joining us, Sarita. And she also is the lady that looks after making our certificates for us. So thanks. Mike Stutz is new with us this course, but has been amazing in covering all his bases in just a few weeks with a website and many, many issues, including a video. I want to share Mike's video with you just to show you what you can do, just as he done for your business. It is not that difficult to do, and the more videos you have, the better off your business is going to be if you get them out for people to see them. So turn your volume up so you can take advantage of what Mike has sent to us.
Hey everyone, this is Mike Stubbs with Affordable Handyman. Our goal is to provide you quality home solutions while making sure you are 100% completely satisfied with the work. Quality craftsmanship with a personal touch. That's the Affordable Handyman difference.
Fantastic, Mike. Thank you so much. And that's what I'm asking you to do, is to consider getting those videos made to help introduce yourself to people. You become a human being and not just a web page. And it makes a world of difference. It's made a major impact in my business, videos have. And Hope shared some time with us last week, and glad to have you back tonight, Hope, in doing your great work. And, you know, I'd like to see some of your videos as well to help move people forward and make them feel better about giving you a call and talking. So thanks for all that you're doing, to not only for your business, but also to help folks and in your nursing work through the years. Hope is over in the mountains in the civil area, and Mike is in Cary. So thank you both for sharing a lot of information with us. If you send to me your names, photos, what you're doing, I'll certainly try to promote you and your business as well, but you need to send me the information. Thank you very much. Okay, it is the middle of August now. And if you have items to sell and services to sell, there's a seasonal marketing is really important in North Carolina. So you want to gear your marketing plan towards the seasons every time you can. It'll make them more interesting, more colorful, and more folks to see them, and make you seem to be more in the groove as far as what's happening. So plan your fall marketing campaign right now. I asked my virtual assistant to let's go back and look at our videos, maybe take some old videos and redo them and inject fall marketing information and images in it. So I'm doing what I'm preaching, so I want to encourage y'all to do it as well. We like to do words of the week in our series, where each week we talk about a different word that help us focus on it, use it in our vocabulary and in our conversation during the week. So this is week 6, and we've got 6 words we're going to go. Let me encourage y'all. It's been kind of fun to have you do your chat board. See how many of the words that you remember. If you want to go ahead and start typing the words in that you remember from any of the weeks, you can go ahead and do that, and then we'll look at them one at a time. So using your chat board among each other, you sending notes to different people on here, learning more about who they are, is a good way to do a lot of networking, and we can go from there. So let's get into it. Remember the words of the week. Let's get started there. This is Otis, my English bulldog. He helps me with this, no doubt. So our first week, we used the term fat, which was actually 3 words that we were after, words that started with F, A, and T. Just to help us, encourage us to bring ideas into what's going on. So on the chat board, you guys type in what the F, A, and T stands for, any of you that remember. There's Pam. Pam is coming in. So you got them all right there, no doubt about it. Faithful, available, and teachable. If you get in the habit of typing in and using this chat opportunity, and you actually type the words in, it's really quite simple and elementary, but you know what? The words will start sticking with you a whole lot better if you do that. So yes, it's faithful to yourself and to your business, be available to the customers, and make yourself available for learning, and be teachable. If you already know it all, there's no reason for you to be here. But I'm so glad that so many folks will come out to these webinars, because we learn so much from each other, and I'm certainly glad to be a part of that. Faithful, available, and teachable. Let's all be for that. And the second week was started with the letter C. Anyone remember what that was? Who remembers what that was? That's right. It was for committed. Being committed, staying stuck to your a commitment to see your business get started and put the time and effort into it that it takes. But that's easier said than done. But if you think of it in terms of being faithful and devoted and anchored and pledged to seeing it happen, it becomes a whole lot easier to hang on and see it through, no doubt. Week 3 was the letter L. Who remembers what the letter L was all about? Yeah, what is that all about? Yeah, it was listen. And here I'm encouraging you and re-encouraging myself to listen to ourselves. Absolutely, we're going to listen to our customers and people we're talking to about. But what sometimes we need to do is just listen to ourselves and what we're saying. And are we using the terms and the manner of speaking that really helps master building relationships? Small business entrepreneurship and sustainability with a small business is more about creating relationships with your customers so that they feel good about sending other people to do business with you and understand what's being said is so very important. Relationship building is one of the key foundation blocks to a fellow, a lady or a guy being able to keep a business going on. Excuse me. Week number 4, wonder what that was. We talked about that too, okay? What is the letter I? What was that letter I about? Yes, it is investing. We were encouraging folks and each one of ourselves to invest, primarily though, to invest in yourself. These lessons that you're picking up now is a good way to invest in your own skills tool belt and having the skills to talk and to do things. I had an opportunity this weekend to talk with a gentleman who's an entrepreneur getting started and very capable, very educated, smart fella. But you know what? He has such poor communication skills and listening skills. He thinks that when he's in a conversation, that it's his business to talk all the time. And I know all of you may be grinning and saying, well, Carver, that's exactly what you do, Papa Steve. You talk all the time. It is, and that's kind of what I get paid to do in these webinars. But I really do a lot of serious listening to you guys and all through the week and work with you. It is so important that you learn to encourage folks to share information with you. And when you're doing that, you're investing in yourself because you're loading your tool belt with things that you need to know in the future. But there's a lot of ways to invest in yourself, so try to look for the different ways that you can. The 5th week, last week, the letter was G, and it's such an important word. There's no doubt about it. It is a word that goes so far for so many of us lives, and it can have internal, really positive meaning for us and help us drive, because the G word is grace. Grace. And maybe you hadn't said that or thought about it often, but I like to think about graciousness. And I can remember some people in my life, usually just on 1 or 2 hands, you would count into folks that truly promote and show other people what grace is all about. But it's not only being pleasing in appearance for effect, but it's also the quality and consideration and thoughtfulness that you share with other people. And it comes to the point that it becomes so natural with you that it becomes just an attractive trait and a characteristic, so that when people think about you in general, the next thought that comes in their head is just how gracious you are and how pleasant you are. Now, that's a person that you will want to do business with, that you will want to share conversations and try to find win-win solutions. So I know some of you folks really well enough to know already that you own graciousness. But now I want you to practice using it and showing it. I'm not saying it's showing it off in a negative sense, but sharing it is a better way of saying it. Share your graciousness, and indeed you'll see how proud you are, not only of yourself, but how much love and pride that other people will take in the fact that they know you and know that you are our friend. So new for tonight is a brand new word. We're just bringing it on. I've already shared it with you through earlier emails, those that have been joining us earlier. Anyone remember what it is? Yeah, it's the word courage. So as we move towards the end of this particular course, I always like to remind people that it's easier to talk about this stuff than it is to do it. And sometimes it's absolutely, needed to do what you have to do to find the courage to make things happen. And just want to encourage all of you to do that. We are getting some background noise, so if you haven't muted your mic, let me ask you to do that, or make sure that you got your background noise under control. I just clipped off a couple here, maybe that'll take care of it. So courage is finding the internal conviction to lead. As a small business owner, as the boss, as the one who is trying to motivate other folks, you don't have to lead. And sometimes that takes some courage to get out of maybe the normal way that you handle yourself or issues that come along. So I'm letting you know right now that it is deeper than just it might happen. It really does need to happen. And for that to occur, your personal courage is going to have to come out. And I'm going to be right there encouraging you all the way to dig down deep and find it. All right, so the words of the week so far are faithful, available, teachable, committed, listen, invest in yourself, have grace and graciousness, and find the courage to lead with convictions. I sent you an email earlier this week about this, and I'll send it again tomorrow for those that didn't get it. My job is to be assertive and to motivate. Assertive and to motivate. When you're owning your own business and moving it forward, you're going to need to be assertive so that you can motivate others, your customers, yourself, the people you're doing business with. As the owner of the business, you just don't sit back and let things happen naturally. You have to be kind of in charge, be assertive, and motivate things to make it happen. It's up to you to do the marketing campaign. It's not going to happen by itself. It's up to you to stay in touch with your customers. And sometimes that takes a lot of motivation of ourselves and self-initiative to get it going. But your job right now is to find the endurance. That's another good word too, endurance. Find the endurance to stay in the game. And that may mean putting a lot of extra hours in these days, or maybe doing some, letting go of some things that's a lot of fun, but you are determined to get your business started, so that's the way that you're going to work toward it, to stay in the game. In entrepreneurship, the successful business that's been around for lots and lots of years and keeps on being sustainable, usually the key dimension there is that business owner has stayed in the game long enough to learn those little fine points, those little strategies that you can put into place that make the major difference in long-term sustainability. But you got to stay in the game a while to do that, to know what it is. To have staying power and to stay in the game, you want to have some things that you're selling and offering that people want, but also things that people need. That's going to give you real staying power to be in business. So as we look at that, and we've been doing 40 drill skills each week, taking about 8 of them each week. I think tonight we're going to wrap them up for this series. But the drill skills are very important, ways that you can own the DNA about small business ownership. So I encourage you to use the handout that I send to you in the best ways that you can. So we're up to number 33 this week, and we'll talk about number 33, and that is, I'm encouraging you to leap and acknowledge when you have a chance to greet a customer. You're at the restaurant, you're sitting down, a customer comes up to you, you're across the room somewhere, and it's time to have a chance to meet a customer. So let me tell you that it's important that when you have a chance to greet and meet a customer, get up off your seat and shake their hand and give them a big smile, or walk up to them with energy. Let folks know that indeed that you are here and willing to see them and want to have a good conversation with them. Doing that is doing everything that you can to show them that you're excited about the opportunity to be with them, be seen with them, and talk to them. When you just lay back in your chair and nonchalantly really don't act like you're excited about having the opportunity to see them or meet with them again, you're missing out on what it takes to be the best entrepreneur you can be. Not only when you have a chance to meet the customer, you not only take advantage of that, but you do it with great enthusiasm. And when you do it, you'll see great smiles and indeed responses back from that individual that makes a lot of difference. Several months ago, my wife and I were at a restaurant having dinner. And I noticed way across the room on the other side of the restaurant, a gentleman that is an attorney and used to do all my work for me was there with his family. And he has since moved to Raleigh now, and I'm not in the type of businesses now that need a lot of attorney assistance, so I hadn't seen him in maybe as long as 6 years. But I finished my dinner, and I saw that he was at a place that maybe it wouldn't be bad if I interrupted him. So I started making my way through the tables over to the restaurant just to say hello to my friend. And he, out of the corner of his eye, he saw me coming over. He put, the very second he did, he put down his napkin and stood up and turned around and stepped towards me with his hand extended to welcome me into that little environment there. That made a big impression on me, and it's one reason I've put the word leap in here, because not only did he stand up, but he did it with enthusiasm, like, man, I'm so glad to see you. I'm not expecting any business from you tonight or whatever, but you've been important in my past, and I know that if in the future you may be important again. And that's my same feeling too. But the fact that he stood up and made a genuine effort to anyone in the room that was watching, that was a testimonial of how to be and indeed a sustainable business person that understands the importance of relationship building. So I don't want to spend too much time on this, but practice this at church, at restaurants, at schools, out in the community. Show enthusiasm when you're meeting your customer or potential person that can be important for you in the business. Now, you have to keep your radar turned on. Things are going on back and forth, and you need to be always looking for what is the next hot thing. Not necessarily what is the next gimmick or fad that's coming along, but have a good fine-tuned radar to be looking for the new product centers that you need to add to your business, the new services that you may need to add, and how you're going to go about it. Things like, 10 years ago, if you said side hustle, people wouldn't have a whole idea of what you're talking about. But now side hustle is a term that's being used by lots and lots of people, meaning a second job or secondary income builder. It's kind of become a hot thing in the teaching area for entrepreneurs. And there's all kinds of things like that coming along. Picture that you're surfing now. You're out in the ocean in the waves and the surf, and you're on a surfboard. You know that you're going to get the action if you can get your surfboard up on top of the wave in front of the curl, right? If you're behind the curl, you're just up and down, just riding the waves out. But to have a good ride, you need to be on the front of it. In other words, what's happening now is to be there. And in business, we always need to be thinking about what is the next hot thing. Well, there's lots of ways that we can find that out. But one of the very best ways is to have that communication skill of being able to talk and listen with your customers. Always ask them, what do you see coming on? What do you think I might want to do in my business so that I'll be better serve you in the future? Make a note on this, because that is something that we all need to be doing. I need to do it every day as well. Structured forecasting is huge. Structured forecasting in our business world is so very important. We'll talk about that tonight a little bit. And later on in the fall, I'm going to do a full webinar on forecasting. So keep in mind, it is a skill that is so important that oftentimes someone just getting into business hadn't thought about it and therefore just don't realize it. But Old Murphy has curveballs he's throwing at us all the time, and there's pitfalls in front of us and unpleasant surprises and unexpected expenses. We want to be forecasting our future good enough to have risk management in place so that these things won't put us out of business and hurt us too bad. But I call that be aware of how important it is to be forecasting all the time. We'll talk about that in depth later on tonight. You want to close more deals, you want to make more profit, you want to be able to feel good and confident when you're going into a situation where you're trying to sell your products and your services. Well, that doesn't come natural, and lots of times people just getting started are quite nervous about it. A lot of times people have been in business a long time are quite nervous about it. I've had those feelings myself, but what will give you the ace in the hole, the secret weapon, is extreme preparation. If you learn how to do your homework, you will indeed become a very much better negotiator all the way across the board. So extreme preparation is the single key that you can do it. If you were taking a really important test, you know already that you have to study the fine points and try to figure out what the questions are going to be so you can have the best answers. You would do extreme preparation in school or in college to pass a test. Well, now you're going to be faced with the biggest test of all, and that's when you're in business, how to close deals. So the same rules apply. That extreme preparation will help you be a lot better negotiator. You've heard maybe, and if not, maybe I'm proud to be able to say it the first time to you tonight, but I want you to own this word, these words, this little saying, and I want you to use it in your mind and often. And it's so important because people really don't care about how much you know. You don't care about how much I know. And people don't care about how much you know until they know how much you care. Caring is the key word. If you are a giver and not a taker, if you are a caring person instead of someone that just uses up other people, you're not going to do really well in business for a long time. You might for a short time, but in the long term, we have got to communicate to folks that we do care about them and their needs, and just not this particular sale that we're after, but the relationship. If you notice, there's a thread coming through here tonight that I'm really focusing on relationship building because it is so important for entrepreneurship and sustainability. Why would an employee want to stay with you for a long time? Why would they want to stay with you instead of, here's another job offer where I can make another $1 an hour? Well, the key is that how, as we as employers, how can we expect our employees to care about our dreams and our goals and us keeping our business running if we don't care about their goals and dreams and how to help them achieve it? The most important way that you can have long-term employees that stay with you for decades is that they know they are a part of your thinking, that you do care about their goals and initiatives and willing to talk about it and willing to do tangible things to help them achieve their goals. When you do that, they are going to stay with you. Other people can offer them jobs and here and there, but they will have a hard time stealing an employee from you if you really care about those employees' goals and dreams and are making moves to help them achieve them. Just keep that in mind. I've got a whole study guide and we'll do some webinars on that. But the type of employer that you are and communicating with them that you care about their dreams and goals goes a long way for those employees to stay with you. Number 39, getting close to the end of the line here, but it's really important. Integrity is so very important. And we are in a place in America during the last few years, and especially during the last week or two, where that I want you to search out and find people with integrity, politicians especially. we're at a crossroads in this nation, and I have deep political feelings, but it's my job as a coach here to say, you are presenting to the world your way that you go about handling things, and I want you to do it with integrity. And remember that cannot be compromised or replaced. We can stand up in front of the world and make our speeches and such as that, and have a lot of charisma, be a lot of exciting, and just make a big show. But I want you to know that charisma cannot replace character. Charisma cannot replace character, and you need character. You want to develop it and hang on to it, know what it is, and be proud of it. So that with the more integrity that the more character that you can hold on to as your foundation is going to come across through the way people feel about your integrity. So give that a little bit of thought as well. And lastly, number 40, just a reminder that in life you don't meet a lot of people. Maybe you've already had a lot of experiences, and you now as an entrepreneur will probably be the boss at some point. You're going to be the owner of the business, and your employees will look at you as the boss. I want to tell you that my 60 years of experiences with thousands of employees nailed down the point that folks very seldom quit a job. Very seldom will people quit the job, but very often they will quit a boss. Very often they will leave a good job because of a bad supervisor, leave a great job because of a bad manager. So as owners of your businesses, I want to say to you, make sure that you're savvy about this, and know that maybe you've got great employees out here that will be with you a long time, but possibly you've got some managers or supervisors that will run them off. Always remember that. The employees, that bottom line, that person that's pushing the cart, has got his shoulder to the wheel and working really hard. He needs to know that the owner of the business cares about what's happening with him and the way he's being treated or the way she's being treated. So just a word to the wise. If you see people that are leaving, it may be that they're not leaving the job. It may be that they're leaving the boss, and you may be the determining factor to get that straightened out. Enjoy your drill skills. Look at all of them in your handout. There's a video for each one of them. Now, football season's coming on. We love football season. The Olympics are just over, and that was a great event. I enjoyed watching some of that. But as entrepreneurs, we need to be in the game. We need to be not in the stands, but out on the field. We need to be getting our messages out on Facebook and in web pages, doing YouTube videos. I would really like to see more mission, vision, and promise statements come in from you guys. They're going to be very important for you. Several of you have sent them, and I appreciate it. Are you taking photos? Are you getting your message out in front of people? Do you have a business card? You even have a business card that you can show to someone. Have you done some YouTube training videos? There's so many little things that we can do instead of talking about them, but actually do them, that will indeed help move your business forward in a very big way. So get that information where you can put it on Facebook. Get some testimonial statements if you've been in business. Have some customers to get you some testimonial statements. That is the biggest tool to help people get rid of anxieties and do business with you on the internet is to do things like that. What can you be doing to move your business forward? So tonight we're going to focus on the three skills, and enhancement of skills is what our goal is here tonight. Bookkeeping, forecasting, and negotiating. We're going to look at a lot of stuff. You've got some great study guides that go into these more deeply than I have time to do it online tonight. So the study guides are very important for you. So let's go forward. We're talking about bookkeeping to begin with. Basically, I'm not a bookkeeper, and you probably are not. However, we do have a couple of people who have told me earlier that they are. And I'm always glad to have resident experts online with us. But as a business person, you need to know daily and weekly what's happening with your business book-wise, profit and loss-wise, sales volumes-wise. And if you didn't have a bookkeeping, you'd have to wait till the end of the year to see what the whole year looked like. But if the whole year has gone by and you didn't make the adjustments that needed, maybe you're out of business before you know it. And if we're not paying attention to our bookkeeping information, we're losing a great tool to help us keep moving. Now, there's several accounting functions in a business. One of them is the bookkeeping function. The other is the accountant's function. But the accountant is a really important person to you because the accountant has certain jobs that they do. They look over the bookkeeper's shoulder, basically. So the accountant is looking at monthly totals, at annual financial statements, at federal tax returns and things like that, and items that are important to officers and stockholders and that. In other words, the accountant's role, or the CPA, if they are a CPA, they're looking at the big picture and the long-term issues. They're looking at your federal and state tax returns and how it affects things in general in your year-end financial statements. And that's all great, and it's important that we learn to use that information to guide and manage our business. But the bookkeeper, more importantly, is looking at daily stuff. What's happening yesterday and today and what will happen tomorrow. In other words, they are looking at every transaction that you're making daily as it's happening, taking them apart and putting them back together so that we can understand what's happening, what's going on. They look at your financial transactions, your debits and credits, the way you're posting and sending invoices. The invoices are coming into you that you owe, bills that you have to pay. Producing invoices that you're going to be sending out to customers. Maintaining all this information in logs and ledgers so that they can be compared and analyzed for profit and loss purposes and for general management purposes. Many folks think that the bookkeeping function in a small business is simply to print out a monthly report so you'll know how much taxes you need to pay to the state or to the federal government or withholding issues and things like that. They have no clue that this information is really more about managing and running your business and looking at how successful your marketing campaigns are and such as that. And that's why we have this webinar, is to say to you, Mr. Business Owner, men and women, bookkeeping is so important to you, not just to have a monthly, how much my checks need to be written for. It is to look at and gauge what you're actually doing in your business and determine what's doing good, what's not doing good, what changes that you might need to make to have more and better sales. Now, in addition to those things, bookkeepers also are the persons that are charged with doing your payroll functions. Probably most small businesses are doing that, but with payroll companies that just do payroll now are really offering great deals and do a good job for a lot of the other small businesses. And that may be a function that you may want to look at, is to have a virtual payroll service look after your payroll for you. But the bookkeeper's role comes in a cycle, and a certain thing happens every day with a bookkeeper. And the slide that's up showing you just the 8 steps that a bookkeeper would be going through to finish his or her job is really quite simple. So I want you to look at the slide here and remember that we're going to start at 0, out beside the word here, transactions, where the cursor is moving around. If you're taking notes, just draw 0 right in there. And remember that we're going to look at each transaction, sales and expenses that the company does, and we're going to break it down in such a way to understand where that money went and why. And we're going to start out with a 0 each day, and we're going to go through all the processes, all the steps about analyzing each expense and each income, and come back over, take out the money that we took in, put it in the bank, and therefore we'll have a zero over here at the end of the cycle. That's what we're going to be talking about doing. So let's just have a trial talk about this. The bookkeeper's tools in the accounting process is kind of lined up with what we call a chart of accounts. And a chart of accounts are the different line items in the ledgers or on the QuickBooks or other type of software that you would use. Each line would be a different account number. And those accounts are called chart of accounts. And you have a chart of accounts for your assets. That's money coming in. You have a chart of accounts and account numbers for your different liabilities. And you have a different chart of accounts for your different equities. Now, remember when we talked in week 2 about doing our business plans and setting up our business models? Well, those models that we talked about, each one of those different models, each one of those profit centers may indeed become one of your chart of account numbers in your asset side, so you can keep up with the individual items that you're selling instead of just trying to group everything together. It takes a few extra steps to do that, but it can give you some great information if you can look at each one of your profit centers and determine how much money it's making each month for you. So usually the asset side of a chart of accounts, someone just getting started in business would name your money coming in as your 100 accounts. That would be number 100, 101, all the way down through 199, different ways that you're bringing in money. Different ways that you're spending money or different people that you're giving money to, whether it be utilities, the power company, main vendors, insurance companies, telephone companies, all these different people that we write checks to, we would have a different account number for them. And most new companies would set up that chart of accounts and call them my 200 series accounts. And then for everything else, your equity accounts, things that are interesting that don't fall under the first two would come under your 300 accounts for things that we hadn't talked about so far and could go all the way up to whatever number you want to carry them to. I've got some 4,000 account numbers on my chart of accounts that all through the years we've taken things in and out and plugged in new numbers. So every company's going to be different. Every bookkeeper is going to do it a little different, but still you need a basis to get started with. So keeping journals may be on paper, and most of us do some of it on paper, whether admitted or not. And then others would be the journals that you keep with QuickBooks on your electronic bookkeeping software. But here's a simple one that someone just getting started, maybe in a business, a building supply business, would just list down the different things that you do. Now let's talk about sales. And when you have sales, you send out invoices to customers, or someone comes into the counter and they buy something, you give them a ticket or a receipt, a sales receipt. And that document is called an invoice. And invoices are numbered. They're numbered in two different ways. Number one, in a numerical fashion, like number 1, 2, 3, 4, and 5. And also they're dated with which date that they were written. So you always want to be able to go back and look at your records very easily and find a particular invoice, because people, customers and different things in business cause us always to have to be looking back at what's happened historically. So if you've kept them in number and you keep up with those numbers, things are going to be just fine. I'm looking right now at the last invoice I wrote today, just an hour or two ago, and that was invoice number 160. 547, 160,547, and that's the last invoice that I wrote. The next one will be 548, and so forth. That numbering system I started back 19 years ago when I sold my bricks and mortar businesses and started my own bookkeeping online. That's a lot of invoices. And through the years, you will create a lot of invoices. It's important that you have them numbered and chronologically organized so that you can go back and find them. So important. So let's look right here. These people are keeping up with the things that they've sold, what the invoice numbers were, what the dates are, different reference numbers. Broke it down to how much money came in, like on the first line, $1,000 came in, and then they broke that down to 4 other account numbers to keep up with what it was. And we'll be doing similar things. As a matter of fact, we're going to do a sample, and I'm going to show you basically what you might do and how you might use your bookkeeping system. And it's a way of thinking, a mindset of thinking at each invoice to help you determine about are the expenses here, are the numbers what I expected, or are there some surprises here that I'm going to find so that I can make adjustments to either stop losing money or how to make more money or keep up with what I'm doing. So let's look at this invoice that's on the screen now, and we're going to call it invoice number 121216. Well, that could be that invoice was written on December 12th, 2016, because some people will use the date as the invoice, and the last number in there would be how many invoices they've written on a particular date. But invoice numbering can be the way that you date them as well, so I just use that as an example. But let's say that Miko has got a gift store and selling different types of gifts. And one of the things that she's selling, or he's selling, is a lot of candles. And I don't sell candles for this fall and Christmas season, ordering a bunch of them and promote them and maybe try to make some good profit. So someone has come in and bought a box of candles, and they paid $8.56 for it. $8.56. Now we can see that 7% of that was 56 cents. That was the North Carolina sales tax. As you're selling products and collecting taxes, let's just say right up front that money, that tax money, is not yours. It's not mine. It belongs to the state of North Carolina. So most bookkeepers and most business people will signal it first to get it out of the way and just go ahead and take that 56 cents and slide it over to your money that you're saving and pigeonholing to pay your taxes with, and that's a good idea. As you take in tax money, I suggest that you pigeonhole it, put it in a place that you can keep up with it separately and do that. But your bookkeeping system will start that process for you. When we move to 56 cents out, that leaves $8. That was the box of candles. So let's analyze through our bookkeeping system and charts of accounts, different account numbers, how that $8 could be broken out to help the owner figure out is it doing good or not. Well, he determined that the box of candles actually cost him $2. So $2 of that was the cost of the goods. So that was a line item that probably said cost of sales, cost of goods. Also, there was 55 cents in that amount that was the freight that was paid to get it, freight and postage that he's already paid to bring that box of candles in here. Now, this particular entrepreneur is paying his sales team a 10% commission on their sales. That is, whoever sold that box of $8 candles is going to earn 80 cents when they did that. So pigeonholing out that commission. Also, this entrepreneur has a customer loyalty campaign where they get a 5% discount or a 5% bonus or coupon for each one of their purposes as a customer loyalty campaign. So that was worth 40 cents. Let's make a note of that. And we know that in his targeted advertising campaign, he spends 6.5% for marketing, special targeted marketing on these candles. So each time he sells a box of candles, he makes a note of how much of his advertising money came back in, and that's his return on investment for his marketing campaign. Now, these could have been set up a number of different ways, and I just did this as examples because every company will look at it different, as you will in yours, but learn to set aside your chart of accounts to give you the information you need to see if your plan is working or not, because if it's not, you can make changes if you know it. And through your bookkeeping system, every month you can get a report that you want. So here, this candle box looks like cost $4.27. That was our net cost there, which was basically 53% of the sale. And indeed, that means that What's left is $3.73 or 47% of the sale. So that doesn't sound like much money, does it? $3.73, but 47% sounds pretty good as a profit. Got to be careful here. Let's don't call it profit. Let's call it margin, because this is just on one item. So profit I like to talk about is the whole business at the end of the cycle. So, but here we got 47 cents. So this is really, really good information to have. But why? First of all, we saw how it individually worked, but more importantly, we know that if we want to make several $1,000s selling candles, exactly how many boxes we're going to have to sell. If we sell 100 boxes of candles, we're going to end up with $373. But to end up with that $373, we got to sell 100 boxes. And to have a place for 100 boxes takes a certain amount of space. It takes a certain amount of inventory, of care. How are we going to merchandise it? Where are we going to put it? How can we look after it? All those things are in consideration. And if we were in an area where shoplifting was an issue, as it is in a lot of areas, we would need an account item to put in there to allow for pilferage or breakage or people stealing from you. So you can carry it down to individual items, individual places to set it up where you want to do it. But this is really important. So let's say that I had made an error here, and we'll come back to this later. And actually, I was supposed to charge 56 cents, 7% tax. But for whatever reason, got distracted or just hit the wrong key. We only collected 54 cents. We only collected 54 cents actually. And where's that going to come up? Well, let's just see. As the bookkeeper would take that individual invoice and break out those items that we did, we would call that doing the journal entries. And as they looked at them and analyzed them and actually wrote them in solid, and that's called posting those entries. And then we would add up all the numbers to see if the big numbers added up to the small number. And that's where that tax issue might have been. And as we were doing that, we would be creating a worksheet. Well, that worksheet revealed that there was a 2-cent error there and that we should have charged 2 cents more in tax. Well, we have to pay that extra 2 cents even though we didn't collect it. You hear that? When you send in your sales tax reports, you don't need to send in that extra 2 cents.
Okay. Yeah. Okay.
So that's really important that we do that. To realize it, but our books have to balance, because remember I said we were going to start out at 0 and come all the way back around to 0. Well, that 2 cents will get in the way. So here the bookkeeper will have to make an adjustment and adjusting journal entry and take out, add 2 cents there to it that we owe to the state, but make a note there, and that note is called an adjusting journal entry. Then she'll move on back around after the adjusting journal entries, write it in, make sure everything is in balance, and then close out the books on how much money we took in that particular day. Your bookkeeper is working one day at a time on all the different invoices. We were talking about one invoice, but she or he'll be doing all the invoices that you did. Now, in my business, my bookkeeper would take all of our money that we took in on a given day and do the bookkeeping analysis and show me how much money revenues we took in, and that would be a plus up there at the top. But then there would be a minus where that we would make a deposit for the exact amount that we took in, that we go to the bank, which would be a minus, to give us a 0 at the top. So all the money was accounted for from coming in from the customer to going over to the bank account, and everything was noted. That's a daily bookkeeping system function. The same type of issues will be going on for items that were related to checks that you were writing. If you had an invoice that came in for money that you needed to spend and you were writing checks, it would be important that you would do that. Now, remember that adjusted journal entry? Make a footnote in your mind here. That particular item becomes the bookkeeper's. get out of jail free in case of a problem. You know, you hear in the newspaper about people that are stealing from their companies, that are investing money here, doing this, that, other things, and the bookkeepers are always the first ones that get accused. Well, the adjusting journal entries are how the bookkeeper proves that she was keeping those books right, or he was keeping them right. And most bookkeepers, professionals, will have a record of adjusting journal entries for all the years that they work for somewhere. Each year or each month, as they do the entries, they'll make a footnote of it, and they'll take that information home with them and keep it in their private files. So if something comes up later on and somebody's going to accuse them of doing something wrong, those adjusting journal entries can be very, very important for them. So if you're thinking about going into the bookkeeping world, or you have one, that might be something that you discuss with them. Have what type of safeguards that they've got for themselves to not be accused of wrongdoing in the future. Okay, that is bookkeeping 101, no doubt about it. Okay. But now let's talk about separation of duties. It's important as entrepreneurs, and you're setting up now, you got money coming in and such as that. How can you protect yourself as a risk management strategy from embezzlement or mistakes being made like that? What can you do to keep people more honest? What adjustments or regulations or rules can you put in place that help people stay honest? Several things you can do, let me mention to you. Number one, the person that is preparing the checks can do that, but maybe if you have a bookkeeper that's preparing the checks, you don't let them sign them, you sign the checks, okay? That way the work can be done for you as far as paying the bills, but you reserve the right to sign the checks. To make it a little bit more safe, you can require 2 signatures on checks. So that the bookkeeper might go ahead and sign the check, but it's not good until you sign after it, just as a step. Some people prefer one or the other. And then a lot of other companies might say that a check's over a certain amount have to be signed by the president or the vice president or whatever the person that you would assign. So there are ways that you can safeguard against big money being stolen from you, taken out of your checking account, such as that. So you always want to keep that in mind and look for a way, make sure you've got good security with your checking. When checks come in, when checks come into your business, either by mail or wire, well, not wire transfer, but checks that are coming in, you want to be careful that someone is not going to be able to steal those checks and cash them and run off with them, knock someone in the head when they're on the way to the bank or this and the other. We have, and that's a good practice, excuse me, to have a for deposit only stamp. So when you get in a check, as soon as it comes in, right at your counter or right on your desk, as soon as that check hits your desk, go ahead and stamp the back of it for deposit only. When you do that, if someone steals that check or if it's lost or whatever, it cannot be cashed. It can only be deposited in your stamp if it is stamped that way or if you've written on the back of it. So that's the number one safeguard. Some entrepreneurs will let the checks come in all week or 2 or 3 weeks before they actually do a deposit to carry them to the bank and make the deposit. That is an extreme no-no. If you're going to be in business, you find a way to make sure those checks are deposited right away. You're doing 2 people a favor here. Number one, you're doing your customer a favor by going ahead and getting that check in the bank so it can be passed on through and show up on their bank statement for their bookkeeping records. But number 2, you're doing yourself a favor because you're making a move to avoid big risk about checks bouncing. You might have some really good customers that have never bounced a check, but you don't want to be the first one. Indeed, they may have had some check-in issues or some mistakes in their accounting or bookkeeping, and a lot of checks are getting ready to bounce. The sooner you get that check into the bank, the less chances are that it's going to bounce, okay? Just keep that in mind. Don't be slow about doing that. Opening your own mail is a good way to avoid risk. If you're opening your own mail, you're going to see if people are sending you past due notices on things you thought were paid. You're going to see some checks that have maybe been written that you didn't authorize. It's going to be up to you to stay on top of your incoming mail. You want to open all your bank statements and credit card bills yourself and just look through them. That doesn't mean you have to analyze them to the nth degree, but you look for things that just stand out as, oh, I wonder what this is. I think I need to check on this. That's being a smart manager. Just do not give all the trust away. You keep other people honest by staying involved in your bookkeeping. Now, the good news is that with QuickBooks and other bookkeeping software now, you can ask for different charts every month to come out of your system. They give you color charts and print them out for good visual methods so that you can see very quickly what's happening. So let me encourage you to look at your business, and as you set up your situations with your bookkeeper, as soon as you get your chart of accounts where you want them, where you know you can stay with them month after month, then you can ask them to use that software to start printing you out charts each month. I'm going through that process right now. We bought on a new bookkeeper late last year, and we're just working through our chart of accounts with both of us feeling comfortable so that I'm going to be able to get these charts coming out on a regular basis, and I know it's going to help me. Your bookkeeper may be the person that's doing your payroll, and indeed, if that's the case, let me give you some tips. One is make sure that your employees know that if they have an issue with their checks, those issues should come back to you first or to their supervisor first that's approving their time cards. You don't want your employees going right straight to your bookkeeper and having arguments or questioning this and that and such as that. Protect your bookkeeper from that. Let them know that they're working for you and they're responsible to you, the owner of the business. If there are issues with the employees and employees have got a gripe, they need to come directly to you first, and then you can discuss it with the bookkeeper instead of putting them kind of on notice or in a bad situation with your employees. Your employees are important to you, and your bookkeeper is important to you. You don't want them clashing. You want to keep a very good divider in there so that everyone can operate kind of independently and get the job done properly. Okay, remember now what we've talked about. If you've got any questions about any of those issues that you want to ask me, it's a good thing. You're certainly welcome to talk now or to send a chat or send me an email, and I'll be glad to try to address them separately. And then after the presentation tonight, we'll stay open and take any questions that you have as well. Do you like to play chess? I enjoy the game. Chess has a lot to do with entrepreneurship and a lot to do with moving a business forward and such as that, because a chess game is different than so many others because it is all about the move that you make right now. How's that going to create future moves for moves for the future? How's that going to affect the game as a whole? And being in business is a lot like that. And the marketing campaign you put out today, we're guessing on what the effects will be down the road. So chess move strategies has a lot to do with running a business, and we'll be talking about that right now. First business skill that I want us to focus on right now is forecasting. And it is as important a skill as any that you can have. And I would guess right now that most of you, if you hadn't been here before, or hadn't been in business before, hadn't given that a thought about bringing out and calling forecasting an individual skill and being able to enhance it. And so that's what I want us to do. We use the word forecasting all the time, mostly every morning. By the time we've been up for 30 minutes, we've tried to find a weather report for forecast. And of course, if we're planning on like cruise for the end of the year, the weather is going to be really important. So how about the forecast? And of course, if we're into agriculture and growing animals, we're all about forecasting so that we put our our males and our females together at a time when the babies will come, the grass will be green. So it's always forecasting, getting our calendars in line. Is that right? You know, I might want to change this title from forecasting to forecasting-calendaring, so it has a better sense about it. My son works for U.S. Fish and Wildlife down in Atlanta, and he's tasked with trying to help control wildfires. And part of his job is every morning to get up and go find out the forecast and for lightning strikes in the real dry areas, because they know in dry areas, if lightning strikes a lot, wildfires can get started. So sometimes if there's been a lot of lightning strikes, they'll go ahead and send crews, and they're looking for the fires while they're little before they become big ones. So forecasting is a part of his business as well as it is mine. It has been for a lot of years. Let me say to you this. If forecasting is not on your mind constantly, then this is the sign, the going out of business sign, that will probably end up in front of your business. Going out of business has so much to do with people's poor forecasting. It's incredible. As a matter of fact, we can say that if you're not forecasting, I can tell you by forecasting that going out of business will be a real situation you'll have to deal with. So don't wait too late. Right now, think about forecasting and how you can make it a part of your ownership DNA. Number one thing that let's talk about in forecasting, what are the different areas, and there's so many of them, but I'm just going to hit on the main ones, and introduce the word turns, T-U-R-N-S, turns. And that is turnovers, inventory turnover. In business, we don't make money until something sells. And when something sells, we get that income to come in, that positive cash flow. That process is called a turnover. We're turning inventory over. And a lot of ways to look at that, but you have to look at it and know how important it is. And forecast, I need to order X number of items now, so I'll have that many to sell this fall, and I should pretty much be able to sell out if I order the right amount. Staffing issues are huge when it comes to forecasting. Having the right people, the right number of people in place, and to have them trained in time to do the job is important. So this I'll put right on your shoulders. Yes, you are going to be the staff probably of your company, just like I'm the staff of mine. And it's up to us to wear one hat saying I'm the boss, but wear the other hat and say, but you need to be trained. We need to say it to ourselves. Well, apparently because y'all are here tonight, you've already had that feeling, and I salute you for giving it that thought. But as you bring on people, you just can't expect, just because you're hiring someone, that they will know on day one what they need to do and how they need to talk to their customers. So know now that you forecast that person coming on board, and automatically you start forecasting how you're going to get them trained by a certain date. Cash flow positions are the ones, or predictions, are the ones that kind of get us in a bind sometimes. We want to have a great big fall. We want to sell a lot of stuff this fall. So for us to sell a lot of stuff, I need to buy it and have it ready to sell when the market's here so I can make some money. But I haven't made that money yet, but I got to spend it now to bring that inventory in. So how am I going to buy this stuff before I sell it? That is the continuing challenge that all of us in entrepreneurship have to face. Well, a lot of that is the way that you set your business up. As are you selling direct to customers and you don't have to buy it until you sell it? Or are you maintaining a huge inventory like a car dealership or a tractor dealership, where you have to have them? If I don't sell $1 million worth of stuff this fall, I've got to have it sitting out here by September 1st. I lived that life for over 50 years, and that always keeps you in debt and keeps you scared, and the market gets you interested and knowing all the good and bad things about floor planning. So having the inventory and having the cash to back it up, or the credit line to back it up, is a challenge. It's a big challenge. So depending on what your business is, you have to have those predictions in place so you don't get in a bind. And if you're having to borrow money, as most of us would, how much is that money going to cost you before you can sell that product? And the cost of that money has to be plugged into the cost of the product for you to come out on the end and end up making any money. Otherwise, your overhead would have eaten up all your profit. All this is about doing your predictions, your cash flow predictions. So as you do your business plan, as we talked about in week 2, you always have to plug in this cost of doing business there as a factor. Otherwise, you will come up short. General risk and exposures have to be forecasted in advance, or the risk will eat you alive. The hurricane warnings about do this, do that, do not go through flooded waters, all those risk management messages got sent out last week. And you notice how the airways were just flooded with warnings, so to speak. Well, I'm telling you that in running your business, there's a lot of warnings that need to go out in advance, and you forecast for those, and that's what you need to do. So you want to think about this business that you're getting into and list down all the risk that you think can really hurt you. List them down in a list, and then let's find a risk management tool to eliminate the possibility that it will put you out of business. Got some good news for you. Once you determine your business, and you don't know because you hadn't been here what the risks are. Every independent business agent that focuses on service and new businesses, they have companies that already have all the risks that you can dream of for every business listed out. So your insurance people can help you with what are the possible risks. And it's a good idea for you to get that list and think about how you would handle these, or if it's going to be important to you. I tell you that getting started with your insurance companies, they are after your business and will appreciate it as a new business in town, and will offer you pretty darn good rates. But as soon as you're in business and get started, in just a few months, probably less than 6 months, you'll get a letter or a phone call from your insurance agent, and they're going to want to come around with the company risk management person. And so the insurance companies, the big insurance company, will send people out to look over how you're running your business and how you are addressing your risk in your business. And they'll have a check sheet, right down the line. And then in a few days, you'll get a report and encourage you to do better on this and pay more attention on that. Indeed, at the end of the year, they come back around. And if you've done a good job with these risks that they have noticed for you and pointed out, then your premium may actually go down a little bit or go up just a little bit. But if you've done a really poor job on your risk management with the things they told you to be concerned about, I'll guarantee you your premium is going to go up, and sometimes significantly, or they may cancel your policy. So having a planned forecast of what's coming in front of you can save you a whole lot of hassle. And I'm just giving you that heads up warning that you want to look after your risk management if your insurance company is involved, and if they're not as well. Where's a good place I could get some good advice about risk management? Find someone with old gray hair like old Papa Steve-O here has, someone that's been there and done that, and just talk with people. Relationship building with people that have been in your business before your time, folks that can give you good advice or share with you experiences they have, may indeed help you put in place better risk management tools that keep you out of trouble. So always be willing to have a good conversation and back and forth relationship with folks that have retired or been in your business before or even now that are willing to talk to you. Sometimes that conversations can just save you so much hassle and grief. All this plays into marketing and strategy and your marketing strategy. Figuring your risk out has a lot to do with what products you're going to sell and what customers you're going to try to go to. It all goes together, but everything that you can do in advance and plan a good plan is so important. A bad plan is better than no plan. So having this conversation with you tonight, you notice I'm not talking about marketing and the internet and this and that. It is simple risk management, doing your planning so that you can forecast the items that you probably need to have in place. What is the actual goal of good forecasting? We talked about risk management now, but now let's talk about on the selling side. Our most important goal is to have the right product with the right quality and style and quantity, right sizes, and to have it ready to sell when the market is hot so that we can get the highest retail price for it. And we want to buy this product at the lowest price possible by planning in advance of when that price is and how to go about ordering it and the right quantities, the right freight on it, and putting into place right now the best risk management tools that we can to make sure that at the end of the season, that if we have product left over, we're able to liquidate it even after the market cools. So that's quite a goal. And in great big organizations, you know, your marketing managers are so important to every company. But my friend, let me tell you, you are your marketing manager, just like I am now. And you've got the most important hat in the room is provided you understand the importance of forecasting. That's going to help you have a better year and make it work out just right. And we'll talk about ways that you can do that. You've done all your forecasting. The shelves are full, everything's fine. So you feel like that you're ready to go. You got your risk management tools in place. And I'll tell you right now that you can have all those right tools and products in place, and customers can come. Your marketing plan can get the customers to come to you. And they'll kick the tires, so to speak, and talk about this and talk about that and ask you 10,000 million questions. And everything is set up for them to go ahead and do the deal, to pull your money out of their pocket and give it to you. But here's the weird thing about this. All that is true, and people still will not buy. People still are going to say, well, I need to go on down the street and check on this price. I need to see if I can find a better deal somewhere else. That's a lot of money, and I just need to do myself a favor and go negotiate, find a better deal. So the bottom line is, my friend, is you've done a good job forecasting. You've done a good job putting your products in place. You have priced them right, and everything is done perfectly, and your marketing plan has brought customers to you. But that doesn't mean they're buying, because lots of times nothing really moves, nothing is motivated until there's an assertive person in the room that is ready to negotiate the deal and close it to make the sale. In other words, there has to be a salesman in the room somewhere, and I'm talking to you. You are the salesman in the room that's going to need to be assertive and motivate this situation into a positive sale and positive cash flow. So how do we go about doing that? Well, first of all, we need that self-confidence to do it, and that's what I want to talk about right now, because you can do it. You can be a successful negotiator, and the way that you do it is to learn to own preparation, own total preparation. Know how to set your targets and your goals. Understand the pricing and the terms and the concessions that you may or may not have to make to close a deal. But knowing how things go and being prepared for it helps you be the person that's driving the bus. A lot of things apply to this. One is the way that you introduce yourself to the customers. Are you coming across as a person that, hey, I'm here just because it's my job to say hello to you? Or, hey, I'm so glad to see you and I'm looking forward to us closing a deal today. I put my trading pants on. Let's pull this thing down and make a deal. It's the introductions that you have. Are you coming across as someone that's ready to do business and excited about it, or just an order taker? Well, Papa Stevens will say to you, you want to be a lot more than just an order taker. Where you seat in a room, where you position yourself at the meeting, putting yourself in a position to do business is so important. Location has everything to do with it. Is your documents, the paperwork that you're going to be working with, is it something that's all scratched up, that's going to require a lot of explanation, a lot more work that you have to do to it? I want your documents to be a work of art. That is, they have been planned and prepared to close a sale quickly and efficiently without anyone having to become stressed out. That's a work of art. Planning that document, that all it's going to require is penciling in the final number, the bottom line, people initialing or giving initials to make the deal official. Plan for that. Make sure you know it's important. Having a list of frequently asked questions. Let me give you some good news. Whatever you're selling, usually the customers that you're talking to today, tomorrow, next month, 10 years from now, are going to be asking you the exact same questions over and over and over. Individual people talking about a certain same product, they're going to ask a whole array of questions, and most of them are going to be repeat after just a few customers. Now, what can you do? Is start making a list of frequently asked questions. Just write it down on each product line that you have, on each profit center that you have. And these questions right now, and then think about them and write right below them a really good answer. An answer that shows you know what you're talking about, you know your product, you have your product knowledge, you understand the pricing, you understand the questions, and you got an answer for them right there. By you being that well prepared, now will help you many years down the road. You get better and more seasoned in delivering, so that when you answer these questions, you're coming across as a professional. That you didn't have to think about it, or you hum and you ah and do this. You've done your homework, you're a professional, you share the answers that they needed and the ones that moved your position further up the road. That's the key to it. Now, that frequently asked questions list can pay a lot of dividends for you. First, you can use it, as I'm saying right now, in negotiating, but you can also use it in your brochures, on your website, and if you have new employees, you can train them with those questions so that they don't have to wait 10 or 15 years to learn this or that. You can teach them right up front. Very important for your negotiations now. Setting your bargaining ranges in advance gives you a roadmap of how the offers and counter offers will go. You know you're going to be talking with this customer about a certain insurance policy or piece of real estate or piece of equipment or a long-term contract on doing services. Have in your mind right now, think about what you think that they are expecting you to say. What kind of price are they expecting to pay? And basically, what kind of range do you think they would try to work within? Because they're thinking. You're not going to surprise them out of the blue with a number that they didn't already have a preconceived notion about what it would be. So think about as you come across with that and what your bargaining range will be. Yes, I can do this and be marketable and maybe get the business price in my product way up here at this high. But I know that I can't come below this amount down here, my lower reach, and stay in business. But I'd like to have the business even at this low amount, but I'm going to try to do a whole lot better. That range between the two is your roadmap of how the offers will come and go. So that when you make an offer, you've got a good idea how they would counter, and you want your counter offers to help improve your position to make the great deal. You do have secret weapons. You didn't know this probably, but you have secret weapons, and you really have secret weapons after you've been in business for a while because you will have been able to identify them. So what are the secret weapons that we all have as entrepreneurs? They are the value-added factors. The value-added factors that we can offer the customer that our competitors are not offering. I didn't say cannot offer, it's just they are not offering. But you have factors in every deal that you can sweeten the pot, so to speak, for your bid without costing you a lot of money, and sometimes no money at all. May cost you a little time. But when you're making your presentation and trying to close the deal at the end, in other words, you sense they have moved into the ready to purchase range, then you want to have a belt full of secret weapons to pull out. Yes, we can do this. We can offer, you can do the deal now with a certain deposit, or if you close the deal now, I can guarantee delivery by a certain date. Or when we do deliver, we don't bring it to you with a full tank of fuel and an operator and show you how to operate it. Every deal is going to be different. Every company is going to be different. But and it's up to you to determine what your closing factors might be, your secret weapons that you can put on right at the end to help close that deal. And if you've thought about it in advance, you will have in your own mind the best time to pull that rabbit out of your hat, so to speak. But the very strongest secret weapon that you're going to have, and I'll share this with you tonight, and next week we'll nail it down anymore, is you want to be confident enough in negotiating your deals that you understand that being able to capture the moment, to use your presentation ability and speech and relationship and eye contact to be able to lower your voice, to realize that right now is the time for me to get real serious and move in and start shaking my head like this and bring in the drama and being dramatic to make this negotiation become a little bit suspenseful. In other words, I'm going to capture the moment so I have got their attention for a few seconds and move in with my eye contact and silences and turning the volume down and asking for the order without making them say, yes, I'll take it, by getting a signature or a check mark or what is that magic number to bring this general high-riding conversation just back and forth like we're just people riding down the road. It's up to you to capture a moment to bring it into the closing moment. And that takes drama. That takes you being in charge and bringing it down to close the sales. Some customers want this early and some customers want to have that chit-chat period for a while. But I'm telling you now, every customer that wants to close a deal with you, there's a time that you just need to move it down, change your conversation, and focus on the close. I like to say it's time to stop selling, time to stop selling and start closing. Close your deals. Now, in negotiating, you always want to have what they call, professionals will call the BATNA, and that is an alternative to a negotiated agreement. So we're changing the stage now in that you're going out to buy something. You now are the buyer, and I'm talking to the owner of the business that's getting ready to buy something. Have in mind and do your homework, find a product that you like, that you would be satisfied with, and see what the best price is you can find on it. And from that vendor or supplier, you write down the number. I can buy this product, and it's going to cost me $10,000. Well, that's good. Congratulations. And this is where most people would just stop and say, okay, I've done my homework. I'm going to go buy it. But no. This is just where you, as a negotiating professional, understand this is where you start negotiating, because you know what your alternative is. You've got a plan B. Now it's time to take this search and negotiating to go out and find a good product, an equal product that you can buy for less money. So when you would find that product from a certain vendor or supplier or individual, you might say, I kind of like the looks of this. I could offer you $8,000 for it. Yeah, $2,000 below what you know you can get one for. And you go through this process in that likeness until you are able to determine, have you really got the best deal, or are there better deals out there? But just taking the best deal or the first deal that you come to that seems reasonable, you haven't done any negotiating at all. No, it's taking it out and then comparing that. Now, I will say to you that in all fairness to that person that gave you that $10,000 offer, if you find better deals out there in the world before you close with anyone else, I think it's reasonable and the right thing to do for you to go back to that person and say, I appreciate the offers that you've made to me. And I'm not trying to get you to change your mind, but in fairness, I've got some people who made me some much better offers. And if you would like to amend your offer and see what you might want to do, I'll be glad to entertain it. They can do it or not do it, but you've done the right thing by giving them that opportunity. So have that plan B, and then go out and start looking for the best deals that you can find. When you're talking with people, and whether you're buying or selling, this is whether you're the one that's going out purchasing something or you're talking with a customer that's trying to do business with you. It is so difficult sometimes to keep the conversation going because they would make you an offer and you just say, no, I can't do that. Or you would come back with them and tell them your offer, no, I can't do that. And so they go different ways. And in most situations where there is no negotiator involved, that's what happens, and that's why people go from here and there and all over the world. But I want to tell you that there are definite ways that you can keep the conversation going. Number one is do not have a take it or leave it attitude. Do not have it's my way or the highway attitude. Because oftentimes in negotiating, the people get fixed on that bottom line price, and the actual price is one of the least important factors involved in whether it's a good deal or not. But you have to be mature enough in business to send that message to people. So what you would do, and what I suggest, and what has worked for me for a long time, is I use the strategy of yes, if, and no, but. Yes, if, no, but negotiating. And what this does is helps you keep the conversation on. Keep staring back and forth until maybe you can find common ground. Now, I printed a little book on this thing, $3 or $4. It's at Amazon if you want to get it. But basically, I don't give you the details right now. We would learn to say yes, if, and no, but, so that our conversation is alive. So let's say that Paige was talking to me about buying a new boat. And I said to Paige, I would love to do this deal with you, and I can sell it to you for $10,000. And Paige would say to me, Lord have mercy. I mean, she would just give me a whole lot of reasons she can't do that, and such as that. And then Paige might come back to me and say, well, Steve, I can't do that. She'd say, no, I can't do that $10,000 deal, but, no, I can't do that $10,000 deal, but if I could take the trailer out of the deal, I might offer you $6,000 for it. Well, what she did there was using the words no and but. She kept the conversation alive. She just didn't say no and leave. She said no but and made me kind of a counter. And I could hear that from Paige. I said $6,000. Paige, I was at $10,000, but yes, I can take you up to that $6,000 deal, provided we can take that trailer out of the deal, and also we dropped the horsepower down about 15 horsepower. Then I could do that $6,000 deal. So by using the words yes, if, and no, but, Paige and I are still talking and still negotiating. And at some point in time, we're going to learn that maybe she could have used a smaller engine and maybe didn't need the trailer. And maybe this, maybe that, maybe a deposit or a better interest rate or a lesser down payment. All these other factors could come into play to help us find common ground. But we get there by being able to say to the customer, no, take it or leave it. That doesn't work. But when we're able to say yes if or no but, there's a good chance you can keep talking and end up making the deal for a win-win solution. Please give this some consideration as you're working down the road. So many of us like to get into business, especially as new entrepreneurs, and don't want to haggle, don't want to negotiate, don't want to bargain. We just want to say, take it or leave it. Well, my friend, I don't tell you that is old school. Cheap, cheap, cheap. You got to be the cheapest person in town to do those kind of deals, and you don't create the fewest amount of relationships with customers that will last a long time. Because when you go through the time to negotiate with a customer, your relationship building, and whether or not you get the deal, that customer is going to feel like that you tried, and they will come back to see you, whether you've done the deal now or not, and they will tell other people, well, give old Steve-O a chance. He will try to get a deal with you if you can. People understand that everybody can't get to the price they want or have the exact product that they want, but they will understand that you really tried and really cared, and you'll look forward for them coming back on the next deal they do. That's being smart. That's being savvy. Yes, if, no, but. Basic first four fundamental rules in negotiating is don't give up anything until you get something in return. Think about doing business as a level, okay? Weighted level, and you need to have a certain point that you are bringing in a certain amount of income to cover your cost. So whenever you give something away, that means they need to add something on their end to balance it out. I'll show you how to do that. Just remember, it's a give and take. That's what negotiating is. You want to make sure that you've done everything you can on the selling side here to get them to make the first offer. And the best way to protect your interest there is setting your advertised retail price. And remember that you need to set those prices high enough to give yourself some negotiating room. And I'll show you later on how to set those advertised prices higher. And it will make a world of difference for you. Matter of fact, we did some of that back in week number 1, and I've got a good study guide for you. But if your advertised price is high enough to give you room to negotiate, then that gets you started off on the right step. Always ask, if you're buying, always ask, in every situation, is this your best price? Can't you offer me a deal? I'm a veteran. Can't you give me a veteran's discount? Or I'm a teacher. I'm a senior citizen. Is this your best price, or can you improve this thing a whole lot? I call that the poor mouthing tactic. Poor mouthing tactic. And I've been using that term for a long time because I've dealt with Sampson County farmers all my adult life, and they are the professionals at poor mouthing tactics. That is, whatever you say to that best price, even if it's the lowest, most ridiculous price anybody have ever said, the best negotiator is going to look you right now and say, now come on, now you can do better than that. Listen to me, my friends. Use that. It is powerful. It is good. Why? Because you can get a concession or a lower price without giving up anything. It don't cost you a penny to say, is this your best price? Surely you can improve this somewhat. And that person on the other side that reduces their price, they've just given you a gift and it didn't cost you a penny. So use that tactic. It's always good. Now, if you're on the other side of the fence and you're selling and someone has come into you and they say, wow, Mr. Carver, is that your best price? I mean, good gracious, I thought I saw it, this $10,000 you're asking, I thought I saw it advertised a few weeks ago for $8,000. And so is this your best price right now? And then you'll learn to say to them, well, you know what, I might have a little bit of room here. Make me an offer you can write me a check for right now. Yes. Always come back with no, I can't do that. Say, I might be able to do a little bit. What is your best offer? What can you write me a check for right now? In other words, you're moving the conversation into a closing situation. Just don't say no, take it or leave it. but come back with words that keep the conversation alive. That is the difference in getting the deals done and in take it or leave it. You do not want to play take it or leave it. Number 4, just as we just said, do not stop the process. Yes, if and no, but will keep that from happening. To keep talking, keep hope, and try to close the deal. It's up to you to do that as the professional. Now, I made a little footnote here. As an entrepreneur, one of the greatest privileges that you have is you don't have to take all the business that comes your way. And there are people out here that you do not want to do business with. They're just pure, excuse the French, a-holes. And when you recognize that fact, or you've done your homework and you know it to be true, then indeed you don't have to take the deals. You can soft pedal, do what you want to do. Sometimes it's better to be friends with people than to be in business with them. So as an entrepreneur owning your own business, always know it's not always necessary that you get every other deal, because some people you can never satisfy, and there will be a constant pain in your butt. Excuse the French, but I've got ears enough to say that is the truth. When I first came out of the Coast Guard in 1969 and started selling, it was my job to sell forklifts primarily and farm equipment in Sampson County and in Hardin County. And my dad, and the term that people used to use way back then was, if you're out here trying to get all the business you can, I mean, just really hot after it, that was called setting the woods on fire. That's when salesmen would go out to set the woods on fire. And man, I was all about doing that. I needed the money. I got paid commission. It was up to me to sell a lot of stuff, or I didn't have grocery money for my family. Well, my dad used to say, and he was an old pro, he said, now, Stevie, you remember, you go out and set the woods on fire, you're the first person that's going to get your ass burned. Or in other words, we don't want all the business. We want the good business. And I'll say that to you right now. Always have your personal goal set at good business and after it. And keep your radar on to look out for those people that will take advantage out of you, lie to you, and cheat you. They are out there, my friends. The world is not perfect, but there is a vast number of people that you can use general good negotiating and the forecasting skills with and end up with win-win possibilities. And that's what I'm hoping for and trying to teach you to be able to find. Tactics and ploys. There's a certain way across the world that people teach negotiating and such as that. And whether you were going to the University of London or Duke University or Harvard or anywhere else, if you were in business classes, they'd be talking about negotiation tactics and ploys. And basically in every college, everywhere, there's about 21 of them. And I've sent you a handout that lists all of them down and tells you all about them. And most of them are good to know, but you may not ever use them. But there's 9 different tactics and ploys that are highly used. And I've used them all my life in business around here, and I have every reason to think you would too. I'm going to share some of them with you now, the 9 that are used most. And one is a fairly new way of a new tactic that's being developed primarily by real estate folks. And I call it burst the bubble. And bursting the bubble is when someone calls you up and says, I see your advertised price on this, and I've got someone that's interested in it, but they want to make an offer that's way below your advertised price. Would you entertain it? Well, this is when you have the choice to have a take it or leave it attitude, or to say this: absolutely, have them send that offer in here. I'll consider every offer. And that's always the way you want to do it. You want to, first of all, you set your price up high enough to give you a negotiating room, and the negotiation can't start till they make you an offer. So it's always yes, send it on in. I'll be glad to do that. Please remember that when you're buying, the sellers may have put a price tag up that's really high, and they've got a lot of room to come down. Just don't take that advertised price as the one that's going to cost you. Indeed, maybe they didn't leave any room at all, but there's a good chance they left a lot of room, and you won't ever know until you give it a try and make an offer. That's where you're going to find your very best deals. Flinching. Flinching is when you make an offer to someone to sell or to buy something, and they take that offer and they go, Oh, my gracious. Remember old Fred Sanford and Sanford and Sons when he get an offer? He says, oh, Mom, this is the big one. I don't have a heart attack. In other words, that offer, when it's being made to you, you in some way give a dramatic reply to it, whether you say anything or not. Ladies are really good at hearing this offer, and they just put their hands up by their temples like that and kind of look down or such as that, and or you get some type of twist, like your back just started hurting you, or you stretch your leg out like, oh man, that was not comfortable. And don't say anything. Just give that physical message that you didn't like what you just heard. With an experienced, especially young salesperson, at the end of the month when they're trying to make commissions, any move like that they're looking for to be able to try to get you to close a deal, that move may have them to come right back to you with a lower offer. Just the flinching move is so important. And following that right up now, when someone's making an offer to you, or you're buying or selling side, and once that offer comes out of their mouth on the phone or in person, silence. Just look, kind of shake your head, send a message no, or look out the door, look over there, put your eyes down, don't say anything. And the same thing can happen, especially with the inexperienced person on the other side of the table. They say, well, what do you think? What can you do? And you just don't say anything. And there's a chance that out of their mouth will come these words, well, look, I can do a little bit better. And then you would say, all right, what is your best deal? But sometimes silence will make you more money than anything you could ever say. In this world of big inflation and years of it, using the term pending or using the ploy of pending price increase to justify why someone needs to go ahead and do the deal now is very, very sellable. It works. Look, we need to close this deal right now because I'm expecting a price increase to come in here any day. Do the deal now and save. Do the deal now and save. Good tactic to use. Number 5, red herring. That is tactics that you use to talk about what the good things are about your product and hide the bad things. A graphic example is the used car salesman would be leaning up against the car, pointing out all the good things, the new tires, the new upholstery, the new wax job, new windshield, all the good things about this car. And the whole time he's leaning up against a little dent in the front bumper. So red herring is saying, talk about your assets and try to bring the customer's attention away from the things that maybe aren't so good about what you're selling. The other side of that is when you're buying, always remember to do your inspections. And if you don't fully understand everything about your product that you're purchasing, bring someone along with you to attest it or inspect it for you. All right? Retreating to higher authority is when someone comes to you and you talk about this and you go through all the negotiating, you come up with a price, and then they say to you, you know, Steve, you've done a good job here, but and I'll take your number and take it home to my mama or my daddy or my wife or my partner, and I'll let you know tomorrow what we can do. In other words, they're retreating to a higher authority. And this is a common practice in the business world today, especially with big ticket items. I will guarantee you when they come back tomorrow, it will be with a lower offer. They're never going to come back and offer you more money. It'll be for a lower offer. So you need to guard against this as a salesperson. And when you're entering into negotiation, one of the first things you would say is, you know, I came here to do business today, and I'm going to make you some good deals. Good deals you'll find anywhere, anytime. But are you ready to do business today? Can you sign the deal? And getting that out front is important. People will tell you yes or no, I don't have to talk to someone. Very seldom will someone lie to you about that. But if they do say, hey, I need your best deal, but I am going to have to carry it back to my boss and get it approved. Fair enough. When you get that message back, you always want to leave yourself one more concession, because they're going to come back and offer you something. And you need to have enough room left to take it or to make a counter offer. So just have your radar up when relying on the high authority is a good tool to use. If you're buying, you can use that to your benefit. Splitting the difference. Had a lot of fun with this through the years, and I'll tell you that you're at a stalemate with your customers, you're still talking, you're going back and forth, you're doing the yes, if, and no, but at some point in time, you really want that customer to say, well, let's split the difference. And you set that up by saying, I sure wish we could find common ground here. We both are so close, I don't want to lose this deal. You keep talking and get them to be the ones to say, well, let's split the difference, or let's meet in the middle. And when you do that, you have basically got a customer that's ready to buy. That is a serious buying signal. They've made the determination that they're going to buy, and they have made you a real offer here. So you always want to keep in mind you can do that, but here's where the professional salesperson would say, okay, now let's consider how that would work. Now I'm at $600 and you're at $400. So are you saying that you want to make an offer of $500? Kind of right in the middle? Yeah, that's exactly what I'm talking about. That's what they would say. And then it's you, the one that's savvy enough to say, well, let's consider this. First of all, you didn't say, okay, let's do it. No, you say, yeah, well, let's consider this. Now I'm at $600 and you're at $500. So, what do you think about meeting in the middle at $550? That's splitting the difference. Well, okay. You'll be amazed at that. You can split the difference sometimes with a customer that's really excited about doing the deal, and you split the difference with them 2 or 3 times. Each time you're moving up the amount of money you're getting, and they're increasing their bid a little bit each time. Mainly because you didn't ever say, yes, I will split the difference. You say, well, let's consider this. And then you come back to your original position and keep moving them forward as you can. You were ready to split the difference from day one, from the first go about, but you're professional enough to know that you need to keep working for your business, keep trying to make a little bit more money. You're not going to lose that deal. You're just going to sweeten the pot for yourself by splitting the difference the right way. Very important tool is if you are able to, when you're buying now, when you're buying is to have your checkbook with you, or have the cash with you, and be ready to write out a check for your lower than what the person is offering to sell it to you for. In other words, you're going to show them a check for less money than they wanted and say, you want to do the deal, here's a check. Now you can take it, or I can carry it to the dealer down the street. In the same way you can have your cash stacked up there. It doesn't get any more powerful than that to close a deal and for you to buy a concession. You boss your own concession there, and it's going to make people squirm and feel uncomfortable, and you got to be careful not to say, yeah, I'll take that check, but you need that. See, they would negotiate, say, I'll take that check, yes, if, but we need to add a tax to it, or yes, if you don't need to do the delivery. So there's still negotiating room, but show me the money is as powerful as it gets. And then lastly, nibbling. Everyone can do it, and I'm encouraging you to do it as buyers will do it to you. That is, after you've closed your sale, is that the customer will come to you and say, now this does include those new floor mats we talked about. And now you are still going to throw in the Cyrus subscription and this and that, and they will keep nibbling as long as you possibly can. And I want you to do that on the other side of the fence. It's the way you can get free concessions without spending more money. But now, as a professional salesperson, I need to say to you, when you close your deal, you make sure that you've written down the amount of money that y'all have agreed on, and both of you have initialed it. Draw a circle around the $10,000, and I initially here and do this while we're finishing up our paperwork. Because it's while that paperwork is being prepared, or that interlude time, that folks will start this nibbling process. And then when they start the nibbling process, and they will, you say, well, let's consider that. Now we're here, right here, and you're wanting me to, and you'd like to add this amount. Well, no, I can't do that, but if you'll just pay my cost X amount of money, we'll go ahead and do that. Or, yes, okay, I can do that, but we need to raise this price a little bit here to cover my cost on it. Oftentimes, the salesperson will make good profits on those nippling items instead of having to be huge losses. You just got to know that it's coming, and you have forecasted, and you know right now, because I just told you this is going to happen, you have forecasted that these questions are going to come, and you already know how much money you can add and make some good profit at it. Big deal. Folks that are inexperienced and face this their first couple of years give away a lot of money and lose a lot of profit and a lot of commissions. Now, there's some 12 other techniques, and they're in your study guide. Good reading for you. We're at 8 o'clock, and I got a few more important things to say if you can stay with me just a few more minutes. A lot of salesmen will keep on talking and talk themselves out of a deal. You need to learn how to hush and close the deal. And you hush and close your deal when people send you buying signals. That is, they start seeing things where they're assuming ownership or start talking about delivery or disappointed with different details that you can't bring to them right now. When people are ready to buy, the salesman needs to hush and close the deal. Now, next week, I'm going to tell you about the closing things that you can do. But once you get it closed, have your paperwork ready and wrap it up. Get those signatures. Tell them how much you appreciate their business, what a great negotiator they were. You need to do all that very quickly and then hush and get out of there. Hush and get out of there. Buyer's remorse is a real thing. People having second thoughts is a real thing. And if you're hanging around chit-chatting, discussing the finer points of the deal after it's closed, the only thing that's going to happen is usually you're going to lose some money or lose the deal. The legacy of good negotiators is really important. The legacy that you create right now as a young business person is really important. Your ability to meet someone new and negotiate a deal that lasts a long time is so important. I'm reminded of my old friend, and his first name was Ball, B-A-L-L. He was a good friend of my dad's, and back in the 50s and 60s, he drove an old Chevrolet pickup that looked a lot like this. But Mr. Ball owned a lot of Alice Chalmers tractors, and he loved buying tractors from my dad, and he had his own way about doing it, and he was a great negotiator. When he came, he was serious. When he came, he had the money to do the deal, and he had created a reputation of being 100% trustworthy. And when he spoke to you, he spoke softly, and you listened to him. He established a historical pattern, and he would give so many people a first-time opportunity, but after that first time, he wouldn't go back. I want you to become a great negotiator. Right from the get-go, you start, when you're buying things that you think that you'll be buying from your company for years or a customer that you want to do business with for a long time, get to know the owner of the business. Be friends with the salesperson, but get to know the business owner and start a relationship with them as a good negotiator and a trustworthy negotiator. When you find someone that gives you good deals, then you want to stay with them. You want to let them make a little bit of money, and you want them to know that you are with them because you like them and because they give you good deals. The contacts that you're making now as a new business person hopefully will last you for the years and years and years. Today, I'm doing business. My main vendors that I'm doing business with today, I've been doing business with them for over 30 years. That's relationship building. And sometimes they're not the cheapest people on the block, and sometimes I have to buy from someone else for different reasons. But I maintain those vendor-supplier relationships on a one-on-one basis, personal basis, and it's so important. Why? Someday you're going to have a cash flow problem. And either number one, you need to buy something and you're going to need some terms on it. You're going to need a little bit of credit consideration. Or maybe you've got a customer that is totally trustworthy, but they're not going to pay you for 90 days because of their company. But you need the product now, and you're going to need to be able to talk to your vendors about that. Every month, something special will come along that a good vendor and a good customer will work out based on their history and good relationships and trustworthy. In other words, be more than just a name on their ledger. be a person, that they know what you look like, what you sound like, and how much they appreciate your business and you appreciate theirs. It'll go a long way to helping your business be more sustainable. Courage. Remember our word, have the courage and conviction to go through the deals, to do what you say you will do, to be authentic, to be transparent, and to make an impact, to do what's right. Maintain your character, maintain your integrity, and I'll tell you this, between your bookkeeping information, your forecasting enhanced skills, and your negotiating skills, you'll be able to buy a lot more material for a lot less money and end up with a lot more profit at the end of the year and a lot less stress. So you got to trust in yourself, because this is all about interpersonal skills that you'll bring out. But yes, you can do it. So I'll say to you, thank you for hanging in with me tonight. I apologize for going over a little bit on time-wise, but it's been a pleasure to work with you, and I hope I've given you some insight into the buying and selling and forecasting and negotiating that I'm sure that you will use through the years. So God bless you and your family and your business. Thank you so much. I'd appreciate any comments that you might have or questions you might have. Hey, Pam, how are you tonight?
I'm doing good.
Any questions?
No, I just want to let you know I enjoy class as usual.
Okay, well, good. Good to hear from you. Dr. Tamara, how are you tonight?
It is well with my soul.
Oh, man, I love that. Okay, where are you located?
Yeah, I'm in Raleigh, North Carolina.
Fantastic. What kind of doctor are you?
So I'm a doctor, actually, of ministry.
God bless you. All right. It is with your soul. So good. Well, I hope you enjoyed the presentation tonight.
It was phenomenal. I can't wait to do the feedback and receive the resources. This has been very helpful.
Thank you, Tamara. Appreciate you being with us.
Yeah.
If you want to send me some information about what you're doing and want me to help promote it, I'll be glad to do that.
Oh, for sure. I captured your email address. I'll be sending you a few links. Website's done, all the fun stuff, promo reel, and so I'll be sending that to you hopefully this evening.
Fantastic. Thank you so much. And take care.
No.
All right, Keisha, good to have you back with us tonight. And Sherry, you as well. Okay, Paige, did you get your money's worth?
Oh, absolutely. I appreciate it so much.
All right. Well, good night to you. All right. If you have any questions.
The fact that it was free, it shouldn't be.
I hear you.
Thank you. Thank you very much.
Sure. Just write any questions over in chat or send me emails. And y'all have a great week. I'll be sending you lots of attachments to your email, and look forward to working with you and for you. Good night, and God bless you all.
Good night, Steve.